We are covering these 5 top actively traded stocks that are bullish today. While watching intraday price actions, let us inform you our review on CSCO. Cisco Systems Incorporated is a global leader in networking, cybersecurity, collaboration, and cloud solutions, with a strategic focus on helping organizations digitally transform. The company operates across key regions including the Americas, EMEA, and APJC, providing a wide array of technologies to support modern enterprise needs. Cisco's offerings encompass its core networking solutions, such as switching, routing, and 5G technologies, which enable secure and efficient data transfer across global networks. In addition to networking, Cisco's security solutions are increasingly vital as cybersecurity concerns grow in an interconnected world. Cisco's collaboration suite, which includes calling, messaging, and meeting platforms, is positioned to support the hybrid work model, helping organizations maintain communication and productivity in evolving work environments. The company has also made significant advancements in cloud technology, particularly with its observability tools. These tools provide full-stack monitoring and analytics, enabling enterprises to optimize the performance of their networks and applications. Recent acquisitions and innovations position Cisco well in key high-growth areas, including cloud, security, and collaboration. As the demand for digital transformation accelerates, Cisco is poised for continued success. Investors should keep an eye on Cisco's ability to leverage these technologies to drive long-term growth and capture new market opportunities. Our review on TSM, Taiwan Semiconductor Manufacturing Company, Limited (TSMC), continues to strengthen its leadership in the global semiconductor market with a bold $100 billion investment, bringing its total investment commitment to $165 billion. This strategic move is aimed at meeting the explosive demand from industries such as artificial intelligence, consumer electronics, and data centers. TSMC's production lines are now fully booked through 2025, a testament to the rapidly growing need for advanced chips. To accommodate this demand, TSMC is building 3 new chip plants, 2 chip packaging facilities, and a cutting-edge research and development center in the United States. The expansion into the U.S. is driven by customer demand rather than political influence, and CEO C.C. Wei emphasized that the decision is based on the company's strategic goals to secure its leadership in high-performance computing. However, this move comes with increased costs for construction and manufacturing, and analysts warn that TSMC may need to pass these additional expenses onto its customers to maintain profitability. Despite these challenges, TSMC is staying focused on its long-term vision, including its commitment to build 11 new production lines in Taiwan by 2025, reinforcing its position as the hub of cutting-edge semiconductor technology. Alongside its expansion efforts, TSMC continues to push the boundaries of semiconductor innovation with the development of 3 nanometers and 2 nanometers process nodes, which will play a crucial role in powering the next generation of artificial intelligence and high-performance computing systems. These advancements are expected to help TSMC maintain its competitive edge as the industry leader in chip manufacturing. Market analysts predict that TSMC will command an impressive 67% share of the global foundry market by 2025. For investors, the company's substantial investments, technological advancements, and dominant market position signal a strong growth trajectory. However, TSMC's ability to manage the rising costs of U.S. expansion and navigate the geopolitical landscape will be key to maintaining its profitability and long-term success. As demand for advanced chips continues to grow, TSMC's innovation and scale will be crucial factors in its ability to sustain its market leadership. Our review on FUBO. fuboTV Inc. continues to strengthen its position as a leading sports-first live TV streaming platform, expanding both its content offerings and user engagement features while enhancing its technology to differentiate itself in a competitive streaming landscape. The company provides access to tens of thousands of live sporting events each year, alongside a diverse selection of news and entertainment programming. Designed for seamless viewing across smart TVs, mobile devices, tablets, and computers, its platform caters to a growing audience seeking a dynamic and customizable streaming experience with an emphasis on live sports. The company's base plan, FUBO Pro, includes over 100 channels, covering a wide range of sports, news, and entertainment content. Subscribers have the option to personalize their experience by adding premium channels and packages, as well as feature upgrades such as Cloud DVR Plus for expanded storage and Family Share for additional simultaneous streams. The platform's multi-view feature on Apple TV allows users to stream up to 4 live events simultaneously, making it particularly appealing to sports fans who want to follow multiple games in real time. As competition in the streaming industry intensifies, fuboTV is focused on strategic partnerships, exclusive sports content, and potential acquisitions to drive user growth and retention. Its monetization strategy goes beyond subscriptions, incorporating advertising and content distribution agreements to maximize revenue opportunities. The company continues to explore new opportunities in interactive streaming experiences, including sports betting integrations, to enhance engagement and expand its addressable market. By continuously improving its offerings and leveraging its strong positioning in the live sports streaming space, fuboTV aims to establish itself as a long-term leader in the evolving digital media industry. Our review on AES. The AES Corporation is advancing its strategic shift toward renewable energy and innovative energy solutions while maintaining a diversified portfolio across multiple energy segments. The company continues to expand its renewables segment, which includes solar, wind, energy storage, and hydro generation assets, aligning with global clean energy transitions and growing demand for sustainable power solutions. Its utilities segment, comprising AES Indiana, AES Ohio, and AES El Salvador, ensures stable revenue streams through regulated operations, while the energy infrastructure segment maintains a mix of conventional and renewable energy assets across various markets, including Chile. The company is accelerating investments in its new energy technologies segment, focusing on green hydrogen, energy storage, and partnerships with companies like Fluence and Uplight. These initiatives position AES at the forefront of emerging energy technologies, supporting grid modernization and decarbonization efforts. Amid increasing global demand for renewables, AES has been securing long-term power purchase agreements with major corporate and industrial customers, further strengthening its pipeline of renewable energy projects. AES remains committed to optimizing its asset portfolio by divesting from coal generation while expanding investments in cleaner energy sources. The company's strategic initiatives aim to enhance operational efficiencies, drive earnings growth, and capitalize on the ongoing transition to sustainable energy solutions. As the global energy landscape evolves, AES is focused on leveraging its expertise in renewable development, energy storage, and digital energy solutions to position itself for long-term success. A review on UMC. United Microelectronics Corp continues to strengthen its position in the global semiconductor foundry market with steady revenue growth and a diversified customer base across multiple industries. The company reported a 4.25% year-over-year increase in February revenue, reflecting ongoing demand for its chip manufacturing services. With a focus on providing integrated circuit production for sectors such as communication, consumer electronics, computing, and networking, UMC benefits from sustained semiconductor demand despite broader industry fluctuations. The company's wafer fabrication segment remains its core revenue driver, leveraging advanced manufacturing processes to meet customer specifications. Additionally, its new business segment, which focuses on solar energy, aligns with growing interest in sustainable technologies. By maintaining a broad portfolio that includes applications in telecommunications, internet infrastructure, multimedia, and next-generation LED technology, UMC continues to diversify its revenue streams. As the semiconductor industry navigates supply chain challenges and shifting demand patterns, UMC's consistent revenue growth signals its ability to adapt to market conditions. With steady operational execution and a focus on high-demand applications, the company remains positioned for continued expansion in the foundry sector. Please subscribe, like the video, and check out more from our playlist. Thanks.